Data-driven, fearless, fueled. This is the Spotlight Business Report. Hello everyone, I'm Mia Rosewood. Welcome to another edition of the Spotlight Business Report, where we peel back the layers of corporate giants to see what makes them tick, or sometimes what makes them explode. Today we're diving deep into a company that probably knows what you ate for breakfast and where you're planning to hide that secret snack stash. Alphabet Inc. From a dorm room research project to a $4 trillion empire, Alphabet isn't just a search engine anymore. It's the digital infrastructure of our planet. It all began in 1995 at Stanford. Larry Page and Sergey Brin didn't set out to build a multi-trillion-dollar giant. They just wanted to organize information. Initially, they called it Backrub. Thankfully, they realized that sounds more like a questionable massage parlor than a tech company and switched to Google. In 1998, they moved into a garage. Today, that garage is worth the company is worth billions. The garage is probably still just a garage, but with a lot of history. Their mission was simple: organize the world's information. And boy, did they organize it! Along with your search history from 2012 that you'd rather forget. In 2004, Google went public. Shares were $85. If you bought then and held, well, you probably wouldn't be watching this for investment advice. You'd be on a yacht. Then came the acquisitions. They bought Android for a measly $50 million in 2005. Today, that's like buying the moon for the price of a sandwich. In 2006, they snagged YouTube for $1.65 billion. Critics thought it was crazy. Now, YouTube is the second largest search engine and where most of us spend way too much time. But it wasn't all just business. Google became famous for its culture. The 20% time policy led to products like Gmail and AdSense. Plus, the free food. Never underestimate the power of free cereal. At its core, Google Search is still the king. It processes billions of queries a day. It's so dominant that Google became a verb in the Oxford English Dictionary. Talk about a moat. And it's not just text. Google Maps is the world's most detailed digital atlas. They've mapped almost every corner of the planet, so you have no excuse for being late to your own wedding. Then there's Chrome. By building the most popular web browser, Alphabet effectively controls the gateway to the internet. They're the landlord of the digital world. They didn't just grow. They swallowed the internet. But by 2015, Google was getting too big for its britches. It needed a new suit. Enter Alphabet. The creation of Alphabet Inc. was a massive restructuring. It separated core internet services from other bets, like life sciences and self-driving cars. This gave investors more transparency. They could finally see exactly how much money Google was making and how much they were losing on moonshots. Take Waymo, for instance. It's a moonshot that's actually starting to land. Self-driving taxis are no longer science fiction. They're in Phoenix and San Francisco. One of their most pivotal moves was buying DeepMind in 2014. It was like buying the world's most advanced brain before anyone else even knew how to build a nervous system. But innovation isn't cheap. These other bets lose billions every year. It's a high-stakes gamble on the future. And so far, Google's ad machine is footing the bill. Beyond cars, they have X, their moonshot factory. From delivery drones to life-extending research at Verily, Alphabet is basically a venture capital firm with its own search engine attached. Then there's Calico. Their mission? To understand and eventually solve aging. It's the ultimate moonshot. Because even if you own the world, you'd probably like to stay in it. In 2019, the founders stepped back, and Sundar Pichai took the reins. Since then, the company has doubled down on one thing: artificial intelligence. But let's be real. Alphabet is an advertising company. Almost 80% of their revenue comes from Google Ads. Every time you click, Larry and Sergey get a little richer. YouTube is a massive part of that. Between ads and premium subscriptions, it's a cash cow. It's basically cable TV for people who hate cable TV. On the bright side, Google Cloud is finally a profit machine. Revenue is soaring as enterprises flock to AI-ready infrastructure. It's the new growth engine. Alphabet is no longer just a search company. It's an AI-first company. But that transition hasn't been without its hiccups. When ChatGPT launched, internal alarms went off. It was a code red moment. For the first time, people were asking, is Google's search reign finally over? After a shaky start with Bard, they launched Gemini. It's their answer to ChatGPT, and it's integrated into everything from search to workspace. Gemini isn't just a chatbot, it's a feature. It's in your emails, your documents, and your search results. It's like having a very smart, slightly overeager intern in every app, and they have the hardware to back it up. Their custom Tensor Processing Units, or TPUs, are some of the best AI chips on the planet. They aren't just building the AI, they're building the engine. The competition is fierce. Microsoft and OpenAI are breathing down their necks. Alphabet is spending billions every quarter just to keep pace in this AI arms race. But AI has a cost. The energy and water required to cool these massive data centers is staggering. Alphabet is aiming for net zero, but the AI surge is making that goal look very, very far away. And the market loves it. Alphabet recently hit a $4.1 trillion market cap. For context, that's more than the entire GDP of many countries. But with great power comes great legal fees. In 2024, a U.S. court officially designated Google a search monopolist. The fallout is still unfolding. The EU has been particularly tough, slapping Alphabet with billions in fines. They're essentially the world's strictest chaperones, and Google is the kid who keeps finding new ways to break the rules. Some analysts are even calling for a breakup. Imagine Google Search, YouTube, and Android as separate companies. It could unlock value, or it could be a total disaster. The jury is still out. Despite the headwinds, Google stock has shown incredible resilience. It's a staple in almost every major portfolio. But is it still a buy at these levels? Alphabet is sitting on a mountain of cash. They've been using it to buy back shares, over $70 billion worth. That's a lot of confidence in their own future. When you look at its valuation compared to peers like Microsoft or Nvidia, Alphabet actually looks, dare I say, affordable, or at least less eye-wateringly expensive. The bull case? Alphabet's massive data and compute advantage makes it the inevitable winner of the AI era. They have the users, the data, and the hardware. The bear case? AI search could destroy their high-margin ad business. If users get direct answers instead of clicking links, that multi-billion-dollar ad machine could start to sputter. Looking ahead, the next decade will be defined by agentic AI. We're talking about systems that don't just search for a flight, but book it, pack your virtual bags, and apologize to your boss for your sick day. And let's not forget YouTube Shorts. It was their answer to TikTok, and it's already serving up billions of views. It turns out our attention spans are getting shorter, but Alphabet's reach is only getting longer. So, the verdict? Alphabet is a behemoth at a crossroads. Its search moat is being challenged by AI, but it also has some of the best AI talent in the world. As of our latest report, Google is trading near $349.78. Always do your own research. But what do you think? Will AI finally disrupt the Google search dynasty, or is Alphabet just getting started? Let us know in the comments below. We read everyone. This content is for educational purposes only and does not constitute financial advice. We're storytellers, not your bank manager. Thanks for joining us. I'm Mia Rosewood, and this has been the Spotlight Business Report. See you next time.